Tesla's stock has been in decline for a while now. However, I do think that's changing. We're going to be talking in detail about why it's becoming the best stock to buy right now for our video today. So without further ado, let's dive right in. EV stocks have lost a lot of steam lately, but Tesla is in a class of its own. The electric vehicle EV market has been uncertain as investors shift much of their attention away from growth stocks and look for safer places to put their money. But avoiding the EV market entirely could be a huge mistake, and ignoring Tesla's lead in the space could be a particularly bad decision. Here's why Tesla's stock is a buy right now. First up, increase in vehicle production and deliveries. While newer EV companies are still trying to figure out how to increase their production, Tesla's production levels are likely instigating jealousy among its smaller competitors. An example would be Tesla produced just over 300,000 vehicles in the most recent quarter, an increase of 69% from the year-ago quarter. The EV maker is also quickly getting those vehicles into the hands of customers, with deliveries reaching 310,000 in the quarter, up 68% over year. Those statistics signify top vehicle deliveries and production for the company, and they came at a time when some production was muffled in China because of COVID-19 related lockdowns. In contrast, Rivian says it will only be able to produce 25,000 electric vehicles this year, down from its previous estimate of 50,000 because of supply chain issues. The point here is that while competition is certainly growing, Tesla has shown that compared to some of its competitors that it's doing an enhanced job with EV production. Next up, automotive revenue and profit are climbing quickly. Tesla's automotive revenue increased at a rapid pace, reaching $16.9 billion in the first quarter, an 87% year-over-year increase. The rise was due to the company's astronomical vehicle production and delivery growth. In addition to its sales jump, the company is earning more profit from its vehicles. Automotive gross profit spiked 132% in the first quarter to $5.5 billion. The result of this was a record non-GAAP net income for the EV company, reaching over $1 billion for the first time ever in a single quarter. Next up, vehicle production might even be better this year. It would be one thing if Tesla's Astral quarter was an off one, but it isn't. The company believes it has a reasonable shot at increasing vehicle production by another 60% this year compared to 2021. Part of that confidence comes from the fact that the company's factory in Shanghai is coming back with a vengeance, according to Tesla CEO Elon Musk, after COVID-19 related shutdowns restricted production last year. Moreover, Tesla's newest factories in Germany and Texas only just came online in March and April. Tesla is still overcoming some production obstacles from the two plants, with Musk saying recently that the factories are losing billions of dollars right now due to supply chain issues. But both are expected to significantly increase their production output this year, and Tesla hasn't changed its previous statement of aiming for 60% higher vehicle production this year, which would equal about 1.5 million vehicles. Next up, an EV leader that's only getting stronger. Like many other stocks during the pandemic, Tesla's share price surged, only to cool down during a wider market sell-off. This resulted in an EV leader whose share price is down 38% year to date. Some of that share price drop comes from Tesla investors worrying that Musk is getting preoccupied with his purchase of Twitter. And while that's certainly something for Tesla investors to keep an eye on, it doesn't change the fact that Tesla's vehicle production is increasing quickly, and revenue and profit are both ascending. Sure, there could be more share price instability in the short term, but with Tesla's early moves in the EV industry already paying off and the company far ahead of its younger EV startups, its stock could continue to be a great long-term play in the EV space, particularly at today's low price. So that goes to the question, is Tesla a cheap stock now? Tesla has not been a cheap stock as of late. In the last 2 years, the company price-to-sales ratio has been traded between 6 and 30. At $711, the stock sells at a PS ratio of 12.9. On one level, Tesla's stock estimate is currently at the lower end of its range for the last 2 years, especially after its recent price-stock altercation. So while it is cheap today, compared to its prices of the last 2 years, it is by no means cheap relative to its extended history and peer. So it's highly recommended to buy the Tesla shares now at a somewhat lower price. Thank you guys so much for tuning in to today's video. Be sure to smash that like button, subscribe to the channel, and hit that notification bell so that you never miss a video. We'll see you guys next time.